We're back. A bold call by the Oracle of Omaha. In a New York Times op-ed, billionaire investor Warren Buffett says now is the time to buy U.S. stocks. And that's exactly what he's doing. Our Becky Quick spoke to him and is back at HQ with more. Becky.
Hey, Mark, as you know, making a call on the markets, that is something that Buffett rarely does. But sure enough, if you open up the New York Times today, this is what you're going to see. Buffett says he's been buying stocks in his personal account, not as Berkshire. This is his own money that he still has. He says up until recently, that account has only held U.S. government bonds. So why now? Why move into stocks? Well, Buffett writes he has one rule, dictates his buying habits. He says, be fearful when others are greedy and be greedy when others are fearful. He argues that fears regarding the long-term prosperity of the nation's many sound companies make no sense. And he predicts most major companies will be setting new profit records 5, 10, and 20 years from now. Buffett does caution, as he always does, that he can't predict short-term movements. Heard Aaron just talking about this. He's not necessarily saying this is a bottom, and he also says he's not buying blindly. In fact, Buffett tells CNBC that he was buying stocks early yesterday, but as the market swung from down 400 points to up 400 points, he stopped doing that, and that is key. You always have to pay attention to the price. That's the one thing that lures him in. Now, this isn't the first time that the Oracle of Omaha has spoken out to the American public on the stock market. In fact, on November 1st, 1974, Buffett tells Forbes, now is the time to invest and get rich. On August 6th of 1979, he writes in a piece in Forbes, those awaiting a better time for equity investing are highly likely to maintain that posture until well into the next bull market. And on November 22nd, 1999, he pens a piece for Fortune that warns, investors in stocks these days are expecting far too much. If you want to figure out what this means in terms of how the Dow reacted after and around those pieces, take a look at a long-term chart. Remember, back in those early calls, 1974, he was saying that was the time to be jumping in and buying. In fact, the market did take off from that time. And 1999, he was a little early, but Aaron, he did talk about at that point, that was the time to be pulling away from stocks. And sure enough, that was before that crash or before the drop-off that we saw in March of 2001. Aaron, back to you.
I believe actually in both 74 and 99, if memory serves, he was 3 to 6 months early in both cases.
Yes, and you got to be
And there's nothing wrong with that.
Right.
I mean,
No,
value investors are usually early.
You have to be, right.
Because they start perceiving value before others do.
Right. And Mark, what's different about these purchases than what we saw recently, the Berkshire moves that he made into Goldman Sachs and General Electric? Remember, those are deals that are different than what you can get in the stock market. The stocks that he's buying now, he's buying in the open market. So he's getting the same deal as everybody else would be if they were moving in.
Well, Becky, thank you very much. And pretty amazing just to listen to those quotes.